Okay, so we've now got Prateek and Sahil from Quotail.
All right. Thank you, Eddie. Like he said, we're from Quotail, and we'd like to talk about the options trading platform that we've created.
So just to start out, I'll get into the origins of the team and kind of how we all met and why we're here today. So Quotail, and just to tell you, so Sahil and I met at University of Maryland. We were engineering students and became friends while being in school. And there's two more members of the team, John, Han, and Amir, who are located in Connecticut, so that's why they couldn't be here today. So the four of us met at school, all of us engineer majors, had a strong technical background, really met in class and formed that friendship really early on. And we graduated and went on our separate ways. And then up until last year, I decided I wanted to move to New York, and I found out that the rest of these three guys were in that area. And last April, I moved to New York and reconnected with these three guys, and Sahil kind of introduced me to the world of trading and options. And the four of us, even in school, had a penchant for math and numbers and were really interested in that whole world. So, it blew my mind what they were doing, and I was interested, and we got involved. And they'd already done some trading in the past, and we talked about implying our, taking our strategies and putting it into an actual product. And so last April, the four of us got together and decided to build a product, and that product is called Quotail. So that's really the origins of Quotail and how we became a team. And I'm going to let Sahil here talk about a bit more about our strategy and why our look into options is different from typically what you see in the industry.
Yeah. So I got into options trading about 2.5 years ago. But I wanted to see from a show of hands, does anyone out there trade options? Nobody. Oh, got one guy.
All right, one person, all right.
1.5, yeah. Anybody trade stocks? A few more, that's good, all right. So this kind of applies to stocks as well. But options, I really got reeled into the world of options because of the potential for high returns. One day I just happened to see the options chain for Facebook, and this was initially when they'd first IPO'd. The first earnings report, the company got hammered, and the put side, all the contracts went up like 10, 15 times. And I was like, whoa, I'd never seen these types of returns in the stock market. So I started trading and learning more about it. And I started losing money right away. It was bad. I tried a bunch of different strategies, and none of them really worked until I came across the idea of analyzing large block trades. So that's the idea behind Quotail, and I'll give you a little bit of a description of it. The options exchanges, they put out information about every single options transaction that happens throughout the day. So that's whether if someone buys one contract or sells 10,000 contracts. They each show up on a line item in this huge ticker tape. And so we wanted to figure out who are the big fish in this massive sea. What are the guys that are putting 6, 7 figures down into an options position, and why are they doing that? The premise behind this is that research showed that options traders, retailers who are trading options, consistently lose money. But options trading is a zero-sum game. So if retailers are losing money, then someone else out there is making that money. And we contend those are the larger institutions. They have an overwhelming advantage because of their deep pockets, their expansive networks, and their dedicated research arms. So we said, hey, if you can't beat them, join them. So we built these tools that really focus on the bursts of correlated options activity, what we called clusters. And we filtered out all the other noise. And we started trading using this methodology, and we found some success. We were able to catch a couple of buyouts before the fact. We were able to see a couple of hedge funds announce a large stake in a company, causing the price to shoot up. So it was pretty encouraging. All this time, though, we were developing the idea kind of in a vacuum. We didn't know who, if anyone else out there, was trading the same way we were. And we did some digging, and we found that there was actually a pretty large community of like-minded traders. And these guys were pretty active on Twitter. They would just be posting constantly all these large options trades that happened throughout the day. And as we saw more into it, we realized that the tools they were using were just woefully inadequate. First of all, the problem is that you only get a snapshot of all the activity for the current day. So if you want to remember what was happening 4 days ago for a certain company, you have to take notes and refer back to that, and it's just a really fragmented process. On top of that, there wasn't any visualization tools to see where money is going into. So you're just looking at thousands of rows of data, really, and it's just very laborious. So we saw a market opportunity, and with our backgrounds in engineering, we saw a way to build a solution. So we began to productize this algorithm. And we've been doing this since last April, as Prateek said, and we're really excited to show you guys for the first time to the public what we've come up with. And so we're going to move to a live demo and show you guys how it works.
So just to play a little joke. So I'm not sure if you get our name, it's Quotail. So to play off the word coattail, the idea being we want to ride the coattails of these large institutions who have this advantage. Took us a long time to figure that out. So while he's setting up, just want to say, so one thing is we spend a lot of time using existing tools. So a lot of the design you see in our application are just areas that we felt were missing in some of our competitors. And we'll point that out as we work through an example with the application.
So I pulled up this particular company. It was one of our more recent winners, a biotech company called theyre. And so we're looking at the 12th of February, that's this particular day. And you can see the stock price at that point was around $40. And what we found is people were buying $50 calls, which means they anticipated the stock going up about 25% by June, which is the expiry. So it's a very bullish sentiment. And on top of that, we saw these calls or these puts being sold out of the money. And based on the open interest, we were able to see that these were to open, so that it's also a bullish position. And the volume on this day, as you can see, is a lot larger. So I forgot to mention the volume on the bottom. These are not actually the stock volume, but the options volume. Green is the total calls, and then red is the puts. So there's a large spike in volume. And then we see that again on the 17th. And once again, we see the same type of position where someone is buying 1,000 of these calls at $50 and selling these puts at $35. And
just to add, so these are the clusters that we were talking about earlier. The line items represent the clusters that our algorithm puts together for you to very easily see a trend in the market. And just to point out, we have charts and this data all on the same page here, because a pain point for us is that we had to have multiple tabs to look at one set of data and then go to another tab to see that chart. So this way, we feel you can perform that analysis much, much faster, because you can reinforce an insight from the chart data right there with the data point on the chart itself on the top.
Mm-hmm. Yep. And then on the 18th, there was a third day of high volume activity, 900% on the call side, and 1,800% spike on volume on the put side. And we see once again these $50 calls being bought. And so at this point, it was still around $40 on the 18th. And then since then, it just took off. It went up. Right now, it's at 49. It was at 51. And those calls that were bought at around $2 are worth like $6. So the people who bought that tripled their money in less than a week. And this type of activity you see is immediately right before the fact. And you see it accumulating over a period of days, a few days. And so we found that looking at it from that time series perspective was really the most effective way at picking out these winners. And so this is more of the analysis section. And we have this, which is the heat map, which shows this overall activity for the given day. So this is how you can really bury into what might be interesting, where some of the anomalous activity is going on. And so the size of these different squares represents the spike in volume. So a larger square means that there was a higher volume input compared to the moving average. And then the color is something you can customize. So this is saying how many percentage of the calls were to buy versus to sell. So this is for the put side, and then like this shows you red being closer expiry versus green being further out in time. So you can customize what criteria you're exactly looking for. And so...
And we did this because, one thing, another pain point we had is that, we aren't day traders. We have full-time day jobs. So we really trade when we have some, leisure time. And we want to build this for people who have day jobs and don't have the time that day traders have. So a tool like this, you open it up and you can really figure out, okay, what's piquing my interest? Where should I look first? And the size and the color are two indicators that clearly direct your attention to where you should be focusing first.
Mm-hmm. Yep. So, for example, we can check out rice, which looks like it's a little bigger, 800% volume call spike, and looking at these line items, you see that there's $20 calls being bought, which is about 2%, 2.5% out of the money. And in fact, today when it happened, the stock went up 4%. And if you go back in time, you can see that this same activity was happening yesterday on the 23rd and also on the 20th. So you see a lot of the times when there's a big movement, there's similar activity that occurs right beforehand. And this is really the type of tool that makes it easy to find those activity beforehand.
And just to add on that point, something we use when we trade is Twitter. So believe it or not, Twitter is quite useful for sentimental analysis, and we knew it was a must to integrate with the product. So on the right there, when you see that little comment box, is actually a Twitter integration. And we pull in tweets about that particular ticker and allow users of our system to comment. So right now, we just see the Quotail because we've been tweeting about it. And so if you were, as you go through different tickers, this allows for a complete analysis. You begin with the chart at the top, where you see the clusters, and it piques your interest that there's a lot of movement here. You reinforce that with the chart on the bottom with the graph data. And then on top of that, you have Twitter for that sentimental analysis.
So that's pretty much the demo right there. Any questions?
So what kind of data sets are you using for, arriving at these results? Like if, say, I'm looking at SPY 200 or something, right? So how do you predict this?
How do we get the data?
Yeah.
So it's public information. It's gotten straight from the exchange.
Okay.
It is a premium feed, though, so you have to pay if you want to get access to it.
Oh, okay.
Mm-hmm.
So you get a regular daily data feed, and then...
Yep.
So it's not a real time?
So it's close to real time. It's about every 5 minutes we get updated feed.
Oh, okay.
So it's near real time.
Okay.
Yeah.
That is something we're addressing, though. With the real-time data, the fees are extremely higher. Mm-hmm. So we struck a compromise in which what time frame can we work with and still also afford. Right. So because real-time data does significantly get much more expensive.
Right. So if I use your product and if I make a trading, would that history get stored, and can I compare it with some benchmarks, some benchmark indices?
Mm-hmm. Yeah, so we would get every trade that happens. So even if you made a trade that was 2 contracts, we would see it. But we wouldn't surface it on this dashboard because we're only interested in the larger clusters, which is something our algorithm just sifts through all the data and finds. And as for backtesting, that's something that we're currently working on. We've built a script to actually look at all these clusters that we surface and see how effective they are, like how much money they end up making in the duration of that contract. And the numbers have been really encouraging. We've seen pretty good. It varies from ticker to ticker, but in some cases up to 80 to 100% average return on investment. And so that data we're working on integrating into the dashboard so that you can look at it at a specific company and see how effective the options flow has been in predicting the future price movement.
There you go. How do you define a big trade?
So that's really the crux of the clustering algorithm. It has certain thresholds it looks at, but it does more than just picking up the big ones. It tries to aggregate contracts that are from the similar person. So it tries to reconstruct the intent. what happens a lot of times is people will conduct a type of order called an intermarket sweep, where they will basically put out their order on all the different exchanges and will get whatever liquidity they can. And so it actually shows up as a bunch of small trades, even though they're from the same person. So the algorithm will reconstruct that, and then based on a number of filtering criteria, we look at the quantity and the amount of money that went into the trade. We'll figure out what is something that we consider to be a cluster or not.
And how do you know they're the same person?
So we don't know if it's definitely the same person, but we have certain criteria we look at, which is if they're transacted around the same time, so within a couple seconds apart, if they're the same contract that you see on different exchanges, and if they add up to something that we consider to be likely, like maybe 100 or 1,000, some power of 10. So all of these kind of factor into the final decision, and we actually assign a confidence score to the cluster that tells how confident we are that this comes from the same person.
Are you planning to expose any APIs?
Right now it's all a single page application with public APIs, which means someone could use the data. It isn't published right now, and it's honestly not something we've thought about up until this point. But if there was a demand, it's there. I mean, they're all there, all the APIs.
Because I guess a lot of what you do is visualization,
Mm-hmm.
but there's crunching behind the scenes, which could feed into someone else's algorithm or whatever.
Yeah, definitely.
How big is the estimated market opportunity?
It's a good question, and the answer is that, well, the market is growing, and in 2014, a quarter of all options trades were by retail investors. This is an outside research group that's putting out this information, and in fact, that number has grown 5% year over year. And what we found is that more of these brokers, these bigger brokers, are pushing derivative products onto their customers because of the higher commission costs they get from it. And so what that means is they're marketing this, and we see the growth rate only increasing as a lot of these brokers now, they're coming out with more sophisticated options analysis tools that is really encouraging people to be more educated investors.
And just to add on that, as time goes on, more and more applications will offer zero commission stock trading. Like Robinhood, for example, is very well known and offers no costs to trade. And we've noticed in the past history, there's been acquisitions of those that specialize in options. For example, I think TD Ameritrade acquired an options analytics company called Thinkorswim. And we're finding that banks are looking for those that do options analytics well, because they want to push that to their customers.
So if this strategy works, why don't you just raise a bunch of money and trade yourselves?
Yeah, it's a good question, and the answer to that is we could do both, and we do both. I trade off.
Or why don't you just be a broker and then sell opportunities to clients?
So there's no such thing as a 100% effective method, and this doesn't work 100% of the times. What we found is it works more often than not, but there's always that risk in trading, and for us, we would rather make money by selling it as a subscription to people, and it's more scalable that way than trying to just trade it all yourself. So we're working towards an alpha release right now, and so if anyone is interested in signing up, please come talk to me, or you can go to the website quotail.co. It's completely free, and we would just want your feedback in return. Hopefully make you some money.
Okay, you guys built this?
Yeah.
I think you've done a really great job. Thank you very much. Very impressed. Very impressive.